जिंदगी के कई मौसम अनुभव किया मैंने। हालात बदले, लोग बदले, अगर कुछ नहीं बदला तो बाबूजी की सिखाई हुई एक बात, वो कहते थे जब नींव मजबूत हो तो फिर चाहे वक्त के उतार चढ़ाव कैसे भी हो, हम उनका डट कर सामना करने में सक्षम होंगे। बिल्कुल इस पेड़ की तरह ऐसा ही एक अटूट रिश्ता जोड़ता है आपके साथ आईडीएफसी फर्स्ट बैंक। विश्वास, पारदर्शिता और सच्चाई का, क्योंकि इनको आपकी सफलता में अपनी जीत दिखती। मैं तो जुड़ चुका हूं इनके साथ, आप भी जुड़ जाइए ना। IDFC First Bank, always you first.
The global pandemic is challenging the entire world, but it hits the poor worst of all. Our clients live in emerging markets where they often can't work from home, they often can't social distance, there's often no running water, and the public health infrastructure may be weak on a good day. All of that, the pandemic is overrunning, and so the impact on the poor has been enormous. Beyond the pandemic, I think we're still tackling enormous issues like climate change, gender inequality, data and data protection, and of course consumer protection. And consumer protection is changing a lot because of the use of digital technologies. We are finding and investing and building institutions that leverage those technologies to reach people that have never been reached before.
A bank that you can bank on. AU franchise has been fueling the aspirations of low and middle income people since the last 25 years. With more than 18 lakh customers across 13 states and 2 union territory. Today the bank has built a strong portfolio of 28 products. Standing tall on the strong pillars of financial inclusion and digital banking, AU Bank's USPs are: AU has built a strong franchise clocking impressive numbers, with a focus to enable financial inclusion in India. Recipient of multiple international and national awards. AU Small Finance Bank is your...
Good afternoon, everyone, and welcome again to the third final session of the microfinance track, which is one of the 2 tracks that we have organized parallelly today. And thank you all for your interest in this conference, even while it is being held virtually. We have a footfall of 850 at the conference today, and we are hoping that a few more will join tomorrow based on the sessions that interest them. So moving on, as I said, to the third session of the track, shifting gears, digital transformation of microfinance institutions. The opening of the track, which was done by Dr. Alok Mishra, and also the opening presentation by Alok Prasad, both mentioned as one of the aspects that we have to look out for future. Not just in the context of COVID, but in any case, the sector was moving towards a digital transformation. I think the pandemic has, probably hastened the pace or the need of it, and more institutions are probably looking at that. But the transformation and the transition is already on its way. So that's the topic for this panel, and I'd like to introduce an eminent and experienced set of experts, practitioners, and industry observers as part of the panel. The session speakers include Dibijyoti Patnaik, who's Director of Annapurna Finance, Christian Bano, Chief Business Officer, CA, and Board Member of Bina Artha, Indonesia, and Van Ponan of Philippines. Shweta Pramaya, founder and CEO of Earth, and Mr. P. Satish, Executive Director of Sadan. And I'd like to introduce the moderator of this panel, John Fisher, Chief Investment Officer of Axion. And I'm I must also mention at this point that this panel has been designed in partnership with the team at Axion, and John has accepted our invitation also to moderate the session. So without any further ado, I would like to hand over the charge of the session to John. Over to you, John. Please take over.
Thank you very much, and it's a great pleasure to be here and to be virtually present at the Inclusive Finance India Summit, and to experience this in COVID times. So thank you very much for putting it on, and thank you very much for partnering on this subject, which is really near and dear to the heart of myself and all of Axion. Axion is a global not-for-profit that's sort of dedicated to creating a financially inclusive world, and we do that in a number of ways, and digital financial inclusion is one of the key ways. We've been working both on the digital transformation of financial services companies in order to benefit the world's 3 billion financially underserved people for several years, and been looking at it both from the angle of fintechs for inclusion, as well as regulated microfinance entities, and transforming them digitally in order to better serve our clients. And so I'm very much looking forward to hearing the thoughts of this august panel on how we can achieve that goal of not only including that 3 billion people financially, but also helping a large portion of them that are not connected digitally to connect to the digital world and experience the power that digital financial services can have on their lives. And we recognize that the different segments of fintech and financial inclusion in some cases overlap, in some cases compete, in some cases collaborate. And we'd like to explore with this group how best to do that from the financial inclusion perspective. I think one of the things that we've seen, as Radhika mentioned, throughout this is that all of the trends that we were seeing pre-COVID have only been accelerated. And in many cases, the digital trust factor that was perhaps lower pre-COVID has gone up quite a bit because of necessity. People who were reluctant to go online 9, 12 months ago have had to, and are increasing their digital footprint. We recognize at Axion that is an uneven progress, and that there are some parts of some segments of the population where that's happening more slowly, and some areas where that's happening more quickly. And I think one of the things that's topmost in our mind is how do we bring those that are moving more slowly along and not leave them behind and leave them excluded from this rapidly developing world. I think the other element that is also important that's topmost in our minds, and I think we'll have the panelists talk about a bit, is the added risks to our clients, vulnerable populations of digital financial services. I think throughout the years, the microfinance industry, the financial inclusion industry has gotten its mind around a set of principles related to client protection in the physical world, but there's a whole new set of problems that arise as people go online, and I think that's one of the key parts of this industry to try to think ahead on and try to address before we run into problems. And then perhaps the last element that I think will be important as we discuss this is we have the industry, we have regulators around the world who are also themselves trying to grapple with many of these issues, trying to come up the learning curve on how best to regulate these sort of services, both from the fintech side, but then also from the client protection side. And I think we'll spend some time as a panel talking about what the regulator approach might be to both of those key aspects. So with that brief introduction, what I'd like to do is begin with our panel What I'd like to sort of ask, as we all talk about digitization, I think sometimes we don't have the same definition of what that means. And what I'd love you to do, each of you, is to describe what in your mind does digitization mean, especially as it relates to financial inclusion sector. And maybe I can ask Satish if you can begin and give us your views on what do you think of when you think of digitization?
No, when we say digitization, I think we have to link it intrinsically with the technological transformation of the broader financial sector. When microfinance sector is part of the broader financial sector, it can't escape the changes which are taking place there because it is intrinsically linked in terms of both what we can say in terms of credit flow, in terms of financial services with the mainstream financial sector. So whatever changes with regard to the technology upgradation which is taking place in this financial services sector in the last 20 years, I would say, because if you basically if you have to put it in a simple language, I would say that transformation from a systems where you have been using more of a physical mode into systems where non-physical modes are being used both in the institutions and their systems and processes, and the institutions in their interaction with their clientele at the field level and at the client level. At all these places, a transformation from a physical mode to a non-physical mode of transactions, that I would put it in in terms of a digital financial transformation. It could be a variety of ways. In some places, the base would be more of using the mobile phone technology, but in some places it may be more in terms of using the business correspondents with their point of sale machines, and some places even the immediate field level banking institution with digital products. That could be the alternative depending on the situation. So I would not like to go into the other things. I wanted to confine only to your question. I would only say is that transforming from existing physical mode, including pen and paper mode, to a mode where which is non-physical in various dimensions, that I would put it in terms of a digital financial transformation.
Thank you very much. Thank you for that. Perhaps I can ask Shweta, I know that you've been working on both sides of the fintech side and as well as digital financial inclusion side of businesses. Maybe you can give your thoughts on when you hear digitization, what's topmost in your mind?
Thank you, John, and thank you, Satish. So the way at least we look at digitization is really a process of optimization. So if you look at a typical life cycle, whether it is an inward-facing life cycle of a company or it is an external life cycle where we are engaging the customer, how do we bring in the right set of tools, whether it is in the form of technology or whether in the form of just process re-engineering, is what I feel is the whole enhancement or the digital transformation. Good examples typically have been in the MFI sector, more specifically is the repayment channel. If you look at it, how do we take it from a cash process to a non-cash process, and how can we optimize that whole process? The second could be how do we originate or form centers? Can we bring optimization so that the efficiency of the loan officer can be perhaps captured in doing something which is more perhaps relevant as well as more value creation than doing a transactional activity? So different parts of the problem or different sides of the opportunity which can be looked at, and a new process can be implemented using technology is really in our minds is a digital framework. It can also perhaps take the language of customer experience. How is the customer looking at it? How much of the financial literacy process can you digitize? Use of biometrics is a great example in that sense. In many world, biometric was adopted much later than India, right? While we adopted biometric much earlier, and customers got friendly with biometric because they felt that that was the right thing to do. And we improved the whole experience of using biometric to authenticate, to identify, to run KYC process. Another great example is computer vision, or perhaps using that technology to identify faces during KYC process of customer loan origination. So a very complex technology at the back end for oversimplifying or simplifying a front-end process can also be called digitization. So that's what, John, I think for me, it's all about optimization, not doing anything dramatic, but more importantly, really looking at the problems or the areas of opportunity and really bringing those improvements using the right technology and tools. To me is really the whole aspect of digital transformation. And like Satish said, of course, being very aligned to what's happening overall from a regulatory standpoint. Systems like CKYC, systems like UPI, systems which government is bringing in to leverage those and bring those efficiencies into your own processes is also digitization. So perhaps, everything that you can use technology for the right reasons, which is adding value, to me is really the whole transformation journey on digital for the customer and for the company.
Good. Thank you for that, Shweta, and I think that's a very useful way of thinking about it, both the internal side as well as the customer experience side. And maybe I can ask Christian, if you won't mind, to go into a little more detail on how you see the customer experience side and the work that you've been doing at Binarta on that front. Because I think that element is something that not only brings efficiency, but also brings improvement to the lives of our customers.
Sure, I agree anyways so far with what was mentioned. So there are two elements which are very important. One is internal. So how we digitize internal processes to make the company more efficient, to make it, make processes faster. And this reflects on the other type of digitalization, which is more towards the clients, And in our mind, digitalizing the relationship with clients has been always adding other channels for clients to contact us and for us to contact the clients. And this has become more and more important in last year during COVID, because of course, contacting clients physically was becoming more and more difficult. So we had to accelerate the introduction initially of basic ways to contact clients. And then gradually we are developing more sophisticated ways for clients to contact us and for us to contact the clients. But the idea of, let's say, digitalization and why we started this process in Binarta to transform digitally was born somehow by a change in vision. So we ask ourselves how we can reach clients more in depth, because so far and in the past we always been perceived as a credit provider only, and we wanted to try to shift and change the paradigm of the company and trying to be perceived as a business partner, and the business partner not only for the traditional clients, so the low income women running micro businesses, but for the family. So starting from that perspective, we say, okay, so how we can reach clients more in depth, how we can offer other services to clients, and the traditional methodology was not ideal to do so. So at that point, we started to understand and trying to understand whether we could add digital channels to add layers of product and services to what we're doing now. And the process basically started at the beginning of last year, and now we are in the process of developing a customer engagement platform, which will initially be a simple way for clients to contact us, asking information, to apply for loans, and to check the status of their current loans, but then gradually will become a way for clients to require additional product and services. So to go through the full process of receiving a loan, or to ask for insurance product and so on and so forth. So we believe that the process of digitalization must be done gradually, starting with introducing something that clients can use simply in a simple way, and then gradually make the offer through digital channels a bit more and more, let's say, sophisticated. And at the same time, we believe that it's extremely important to maintain an hybrid methodology. So we don't believe in full transformation, because we know, and we serve 90% rural clients. So we are really focusing on rural, let's say, regions in Indonesia, and we know very well that many clients don't have access yet to smartphones. And even if they do have access, they don't use smartphone to access digital services. So we did a survey at the beginning of this project, and we found out that only 16% of our clients were using smartphones to access digital payment services, though 70% of the family had a smartphone. So we are far from a moment in which we can really transform fully, and therefore we want to maintain our physical network in the field, and the digital part is an add-on, and to allow clients to reach us in different ways, and to access services in different ways.
No, thank you very much, Christian. I know that DJ at Annapurna, you've been working hard on this this area. Perhaps you could give some of your experiences in digitization at Annapurna, and what you've seen, especially relating to the client experience. But then also, I know that you've done a lot of work in terms of thinking about how to make operations more efficient, etc. So it'd be great to hear about those two elements.
Well, thanks, John. I think from our experience at Annapurna in the process of digitization, and we've been working with Action around that program. It's basically under two things. One is the services that we provide to the clients. The processes that we follow, whether it is an internal process or an external process. If that process, which is today maybe dealt manually or physically by somebody, can that be replaced by a technology? That is number one. Number two, how can we bring in more efficiency, flexibility from the customer's point of view? What the customer's needs are, and if there is a technology available which can then help us to serve them. Like, for example, nowadays we are talking about in a very highly personalized loan requirement. We were always in a JLG model. It is always followed in a cycle kind of thing, but you don't need to do that. If you have a proper technology, each individual can be served, can be underwritten, and given a individual a dose of loan. It can be made a lot of flexibility in terms of how they can pay you. Instead of following a weekly or a monthly payment mode, they can be given a lot of optionalities in terms of their repayment methodologies. You don't have to go visit them and get the money. They can pay you digitally. Their time is also equally important. Why do you want to go and meet them physically? You can meet them virtually, like the way we were meeting. So what are the things that can be replaced? I believe at Annapurna, we all believe that everything will be replaced over a period of time. It's just about time, or just about starting somewhere, and we have taken that step. There are some missing links, like in India, we are yet to use. We were not allowed to use Aadhaar, or I think we will get into that when the regulatory things you will ask us. The challenges around that, and some of the areas like the infrastructure. Being a rural MFI. What we are facing is the infrastructure, but also the fact that we are a very technologically advanced country. The designers, the engineers, they supply this to the entire world. And why can't we just fine tune some of them, and reimagine the things? You have, and I think
COVID has actually created a huge space in this particular segment where you can actually rethink everything. The inaccessibility. So the deficiency in the system was also taken up during COVID. You could feel the heat that I am not in a position to access my client, or I am not in a position to deliver a loan if it is required at her end, or if she is not in a position to do a transaction, if she is not technologically enabled enough. But I mean, I think from our side, from Annapurna side, for us, digitization is this, to bring in efficiency and to replace anything that a machine can do better than a human being. We would like to replace it by a machine. You don't need a human being to do it, because machines are always efficient. Human beings are there to do much greater and larger, things. Maybe more customer care, more time, spending time with quality time with customer, try and understand their requirement, their needs, than just filling up the forms, or for example, as Sweta ma'am was also mentioning that it can be as small as reading from the KYC. Just put a very small, very basic level of technology that can save a lot of time for the person who is going there and typing everything on his app. So those basic things also, from that to complex underwritings, bringing more data, bringing the footprint into it, and trying to understand if I can underwrite a client, from that to that complexity. I think digitization has a huge space and scope. And moreover, pandemic has actually pushed us to rethink about it. If at all we were all thinking that digitization, we at least all agree to this, that digitization will happen, if it not today, tomorrow. But now I think this pandemic has pushed us all towards that, probably, which we were thinking that it will happen in 5 years. You will see that happening in 2 years' time. So that is how the things are, moving. If you have people who are street vendors who are accepting phone pay now, they can take the payment from you. I can very well underwrite them on their phone pay transactions. So a lot of things. There's a lot of possibility now, I think, in digitization space.
No, thank you for that, and I'm hearing a couple of themes that I'd love to come back to. I think one of them is perhaps we talk a little bit about this change from COVID, and I think we were all seeing these trends that DJ was mentioning pre-COVID several years back. That digitization was gradually encroaching in and becoming available in the markets we serve. I think in many countries we've seen digital acceptance accelerate, and that's on a number of fronts of what the technologies available to our clients is, the trust factor that our clients have in those technologies. But perhaps, Christian, you mentioned this very low access to smartphones and usage of smartphones for financial services. Have you seen that element start to change under COVID, or are you seeing any trends towards faster digitization due to COVID?
No, for sure it's happening. And so in our specific case, initially, because we could not enter the villages, so very practically, we ask clients to make themselves available on the phone and to use WhatsApp when it was possible. So we were contacting them regularly just to make sure that everything was fine, to check the situation in the village, to organize the payment of the installments, and gradually we started to upload also some training that they could go through about how to maintain. To keep safe from COVID, how to wash their hands properly, very simple things, and we saw that they were appreciating and using WhatsApp much more, so that we could contact them gradually on WhatsApp. So somehow the fact that they usually have within a family at least one phone, and very often they have a smartphone now. But especially our clients, because for now the average age of our clients is 35, 40 years old. So we are not, but probably only marginally reaching the younger generation, and this is why we change also our vision to try to look into family and not only to the traditional clients that we always served. But gradually we saw that also our segment started to use a bit more the phone, but we still believe, and this is proving for now quite true, that we need to maintain a network in the field, because we still need to carry the clients along the process of digitalization. They need someone to help them, very simply to download the application, to onboard into the app, to start using the services. And the beginning will be the loan officer doing that for them, and then gradually, day by day, month by month, they will start using the app by themselves. And if they cannot, or they don't want to, we cannot exclude them, of course. So people need to be there still to support them. So I see still the process to be a gradual process. And I believe that, center meeting and people in the field will always be important, but they will change role. They will change gradually role. They will be more exactly focusing on customer services, high value sort of services, and less on processes and bureaucracy. So I agree with DJ about this. And we are trying to think of a model in which center meetings becomes service hubs, so that some products, some services can be ordered through an application, but then if the person wants to access physically or to collect the good, they can go to the center meeting, which will be a service hub at that time, and collect the good physically. And then gradually center leader can also have a role, because they learn how to use the app into delivering services to the dealers themselves without our support, and they can get a margin out of it, so they can get a source of income. So we see this model which we call phygital, which is a mix between digital channels and physical presence, because we believe that some level of physical presence maintain the relationship that we build in so many years, and this is our real competitive advantage towards fintechs. So this is why we still have a role, because otherwise we would have been dead already. I mean, there are so many fintechs in Indonesia. You have huge ones as well, like Gojek and Grab. So it's important to really maintain this role, this relationship with clients, but we need to modernize ourselves. We need to innovate for sure.
Thank you for that. Shweta, you've thought a little bit about this question that Christian brought up of how do you transition your own workforce into that value add that you mentioned at the outset. Maybe you can talk through that, because I think one of the fears of digitization is that it's going to have a terrible impact on unemployment. People who previously had work as loan officers will be put out of work and replaced. But it seems like at least there's some consensus among a number of members of the panel that it's sort of a repurposing. And I wonder if you could speak a little bit to that, and also how that how you've seen that evolve over the past 9 months as we've been trying to work from home, socially distanced, meetings, things like that.
Yeah, thanks, John. And I think this is, to me, has been the biggest learning, I think, post-COVID, but I think in general, how do you transition from one model to jumping into something else that you're trying to achieve? And I think even for us at Earth, traditionally, you will get the type of team members or employees on ground who have been part of the core old school way of doing lending. Let me just say that. So for us also, at least during COVID, what happened when we wanted them to become the champions to do outreach to customer, even something as small as that, right? We had to first do sessions virtually with them, that what do you really do in the outreach? What are the kind of questions you need to ask the customer? It's not about just asking them for a, sort of loan repayment, or just telling them that they should go and sort of deposit the money into the closest bank. So it was really also in terms of a lot of behavior retraining that we had to do with our own team members, which is just purely during COVID. Second is in terms of using, so during COVID, we also built a very easy use chatbot for our own teams, internal teams. And we use that mechanism to very quickly send information to our teams who were sitting in different parts of India. And that was used as a mechanism to tell them what do they need to tell, what are the questions, what is the kind of information, what is the EMI schedule, because many loan officers were not able to access desktops that were at the branches or the centers, etc. So even the utility of that chatbot had to be trained first, and to be explained to them that, this is now sitting on your phone, you will get notifications, please check that, and then perhaps use this information to do outreach. We had some success, but later when we came out of it, we actually acknowledged the fact that a lot of the training was needed internally in terms of all levels of teams, whether it was a loan officer, and we internally call them as wealth officers and loan officers, cluster coordinators, Sakhis, these are women coordinators who only work on welfare services. And we basically started doing these group exercises, where we said that, they need to be trained in terms of how the customer engagement is going to change, and what are the type of questions you need to ask the customer so that you have the right level of empathy, as well as the right level of balance, which is to do with now you need to go in and you sort of collect, your repayments. So we did a lot of those trainings, and they were very periodic. We did virtual. We also did all hands. So it was a lot of sort of grooming, I would say, which had to happen. Second level, what we did, John, which was interesting, is we hired a lot of freshers. And this was another thing which we consciously did. So one thing that you could do is, of course, hire somebody who comes from the same network. The second thing we realized was that maybe hiring people who were directly coming from colleges were better equipped to be trained to the new model. So at every center/branch, we started recruiting for graduates and freshers who were coming in and bringing the new sort of, you could say, very fresh level of thinking, because they had no history of what a typical or an old school model looks like. So we have now created a good blend and mix of people at each center and branch, which is old people. So there is handholding, there is knowledge. At the same time, a new crop, a new set of team members who have come in, who have literally no experience of the past. So it's a tougher challenge for the company, but at the same time, it's more relevant because we need to now equip all of them with new, in a sense, not a way of working, but at least approach to customer, which is very different post-COVID. And unless everybody understands that the approach or the engagement to customer has to change, we'll not be able to be good active partner in the financing ecosystem. So that's the second thing. And third, of course, we have increased the level of monitoring tools as well. So, typically one would do is in your applications, you will have GPS coordinate tracking, etc., etc. But it's not about really monitoring who is going where. It's also about ensuring that a right set of information is provided to your teams so that they can engage the customer at the right time in the right place. So now we have developed tools which are purely, you could say, loan officers engagement tools, which is we equip them with information to say that here are your list of customers. This is, what was the last disposition about the customer as per the customer, the call center team. And this is what you need to ask these are the set of questions you need to now take to the customer and find out and send the latest disposition. Now, this itself is a new concept for somebody who is now going and talking about not a repayment, but literally like, how is your business now? How was it affected? Is your husband well now? Is your child going back to school? So these are the dispositions which we have now started capturing and started giving on the field officers app, as we call it, which is helping us change the way the reskilling in that sense of the teams are happening. So 3-step process, of course, the technology upgradation. Second is bringing in old with the new. so that there is a good blended composition of people. And third, of course, is also giving them the tools to be able to better equipped to engage the customer. And these are the three things that we have done over the last, you could say, 10 months to be better prepared for a reset new world post-COVID.
No, that's great. Thank you. And perhaps I can ask a question came in about group center meetings for collection and whether it's possible, desirable to replace those center meetings. I know that DJ at Annapurna, you've been thinking about sort of reimagining group lending and incorporating the transition to enterprise lending, etc. Maybe you could speak a little bit to your experiences in that of how you reimagine group lending during COVID, and then how that looks post COVID.
Well, John, first of all, when the entire group architecture that we used to work, that was actually very, very feasible when the loan size were around 20,000 rupees. But when the loan sizes are going up, we are talking about 60,000-70,000 rupees to 1 lakh rupees. The new limit is 1.25 lakh rupees. You need a serious underwriting. You just can't do the basic check and give a loan. And if you do that, the consequences are what. So I think not only from the group lending perspective, we all have to rethink from the underwriting perspective, how equipped we are, how better the technology can be used to underwrite these customers in a more independent and in a more prudent manner, so that can be taken care of. Otherwise, if you keep doing the same group lending methodology and keep raising this bar of giving them loans, maybe to start with, if somebody is new, we at least at Annapurna are thinking, even before COVID, we have started thinking about it, because what we have found that during the demonetization and post that, how our portfolios are behaved. And we started looking at digging the data and try and understand where it is the problem. So we started finding it that the problem is when the EMIs goes beyond a particular level, then the chances of the defaults are high. That means a particular level of loans. And then we realized that this particular level of loan we have to give, we can't just go ahead and give them in a group lending methodology. We have to seriously think about a individual way of underwriting them, checking their 360 credit bureau, try and understand what are the other requirements they have, what are the cash flow, what are the risk involved, and then underwrite that kind of a loan. So for me, group lending till a level, your first cycle, third cycle, second cycle or third cycle is okay to introduce them to a behavioral, cultural aspect of financial services. But beyond that, when you were thinking about a little larger ticket size loan or a SME loan going forward for them, graduating them, then it is a very, very different, ball game altogether. And I think that is where the challenges are. It's easy to organize people. The methodology is well established, and that's why MFIs in India are not really moving towards that. And there are a lot of but I think eventually people will slowly move. I'm sure move towards that and start looking at more individual loans at a higher size, but group lending would still be there in a lower size. Replacing the meetings. If you're in a group lending, you really can't replace that. That's a sacrosanct methodology. You can't really replace that. But if you move them to much mature or individual lending space, you can absolutely do away with the group meetings.
Thank you, DJ. And perhaps I think we have a group of fairly a very forward-thinking group of entities with Annapurna, Artha, Binartha. Perhaps Satish, you have a broader perspective over what's happening throughout the microfinance sector, how broadly microfinance entities are thinking about it. I would love to get your thoughts on this question of how microfinance entities as a whole are approaching digitization and sort of the any acceleration that they're seeing due to COVID, and sort of what the long-term impacts you're seeing for the industry are.
Yeah, thanks, John. First thing is, I think all our practitioner panelists have brought in their perspectives from the institutions, and all of them are relevant. But main thing which we should not forget the fact that one of the main contribution of the microfinance sector has been to take the financial services to the doorstep. If by process of digitization or depending on another bigger entity, if that advantage, if we are nullifying, then I think that's something negative for the microfinance sector. That's something which we are always trying to guard, because even when demonetization happened and almost 100% of the loan sanctions were being credited to the bank accounts, we are also apprehensive whether again the people have to travel to a bank branch situated 20-25 kilometers to, if they want to transact their financial transaction. But fortunately, since we had established network of banking correspondents, and most of the villages also had their POS machines, and even mobile was being used in a big way, we were able to, the sector was able to maintain its doorstep delivery of financial services. And that I presume that we should be able to do that when we continue even with digital collection, which now slowly most of the institutions have started using a lot of now, as Deepjyoti was mentioning, that there are a lot of mechanisms and systems are now available, because NPCI is taking a big role in taking the payment systems across, and we have a number of payment wallets and the payment banks, especially the India Post is willing to work with the microfinance sector on the collection side. So we will be able to do that. But only thing is that as a overall in the sector, we are, as a sector association, we are also looking at the smaller institutions and weaker institutions, because they also should be enabled to be on the digital financial inclusion space. There also we find that as far as the internal processes are concerned, systems are concerned, most of the institutions are able to adapt, and though their systems may not be as robust, but there is always a willingness, and there is always a there has always been a inclination to go towards digital transformation as far as their own systems and even field operations are concerned, and dealing with their customers, all their loan originating systems, customer identification systems and all. Even the smaller institutions are now able to digitize these processes in a gradual way, though I would not say that it has happened 100%. But what we also find is that in the smaller end, where their lagging is with regard to the digitization of the collection practices. There we find that only of the MFIs which have a loan book less than 100 crores, only about 20 to 25% have been able to fully digitize the collection processes and systems. Most of them are still dependent on cash collection processes. So that's something which we will have to work, and as a sector association, we are trying to see whether in a broader way, whether we can facilitate the smaller institutions to access technology and as a sector as a whole. So that's something which we are working. We are working with DFIs like BARD and SIDBI to support this effort, and also with some technology companies who have shown some interest in that. So we want to not only we want to say that the digital financial transformation should not only be restricted to the institutions which are having a better financial strength, but also middle and lower end of the sector also should be able to transform digitally, because there is an appetite there and there is a demand from the clientele. So that's the reason why I think I am what I can say is that I am very optimistic about the digital transformation of the entire microfinance sector gradually in the years to come. And one aspect I wanted to touch upon what Dibjyoti was also mentioning with regard to the group mode. Even in our code of conduct, with which MFIN and Sadhan have mentioned, that they also said that though the 1.25 lakh limit is there, if you are using the joint liability mechanism, let it not cross 60,000 or 70,000. So that and we have also seen across the world also that at higher levels of credit, the joint liability system fails. So I do agree that at least I personally feel that at least when the loan amount crosses 60 or 70,000, you have to bring in better credit appraisal mechanisms rather than just relying on a joint liability mechanism. But at the same time, we have to keep in the back of our mind that one of our strengths or one of our major selling and talking points of the microfinance sector has been unsecured credit. So how, with individual limits going up, to what extent can we maintain this unsecured credit portfolios is also something which along when we digitize and when we look at individual versus the group loaning, that question also will bother the sector in the years to come.
Thank you for that. Perhaps turning a little bit, and this fits into a question that just came in, really on this question of, we've been talking a lot about, I think, the benefits of digitization. I'm really happy to see all of the panelists talking about this from a non-fear factor, but from a mission factor, because at least I see digitization as really responding to all of our missions to serve our clients better, more efficiently, more cheaply, etc. I think we shouldn't neglect the sort of fear factor that we are seeing on the horizon all around the world. Fintechs coming in to the space, sometimes competing directly with us. I think, at least in my own experience, 5-6 years ago, the mantra from the fintechs was, banks are finished. That's it. It's going to be fintech is the future, etc. Today, I'm seeing a much more reasonable approach to it, and a recognition that licenses are important, that fintechs can do a lot and have a very important contribution, but the presence of that last mile that very often an MFI can provide to the clients is key. That, as we've talked about in this group, the digital footprint is not evenly distributed, and perhaps digital footprints are more intense in urban areas, less intense in rural areas, etc. But I would love to get your thoughts on the relationship between digital financial inclusion on the one side and fintechs on the other, and how you see those two overlapping. And I know, Shweta, you're working sort of both sides, and perhaps you can give some thoughts on how you see that relationship between fintech and digital financial inclusion evolving.
Yeah, thanks, John. And I think I think the good and easy answer to this is that India is a very, very large country, and the opportunity is too big for any one model to really succeed. And even more so, if you look at how the digitization in India overall as a country is happening, it has been gradual. It has accelerated over the last 10 years, but it is still 5 to 10% of the entire country. So while we see a range of fintech companies come in, we ourselves, by the way, we also call ourselves as part of a fintech ecosystem, because our entire solutions are built on advanced tech. But we do have a blended approach to customer, which means that we have physical channels, we have centers, and we have branches. So I think both in terms of what fintechs, pure play fintechs, which are technology companies, have a role to play, more in terms of bringing whatever is already digitized to the customers who have come up the learning curve, which is 10% of the overall population. We may have some 600 million smartphones in the country. And to the earlier conversation, this doesn't mean that everybody is banking or using multiple use cases on their smartphone. They're using it for other purposes. Having said it, as far as the old school agencies are concerned, the MFI institutions are concerned, the cooperatives are concerned, the labs are concerned, the payment banks are concerned, the post is concerned, there is a lot of play which needs to happen as far as the customer engagement on the ground is concerned. And I think fintechs have not replaced that, because fintechs are playing on the data which is available. And fintechs are working on really creating better processes, better methods to identify, originate, and of course, in some cases, even do credit appraisals better for a customer who's already digitized. And the companies, on the contrary, which are the likes that I just mentioned, are actually acquiring that data still. And they're actually physically going and acquiring a large amount of self-declared data, a large amount of KYC, and a large amount of, you could say, other data points like the Aadhaar numbers, the PAN card numbers, etc. So there is, you could say, many of these companies are actually helping get a large number of customers digitized, while on the contrary, the fintechs are using whatever is already digitized. So they are not going to, in a sense, in the immediate future, overlap or take each other's territory in that sense. Having said it, the way I look at it is a large play on collaboration and partnership which can happen. MFIs can, to a large extent, are actually, if you look at it from an opportunity standpoint, I say MFIs are very well placed because they have so much data. The challenge is a lot of this data is not very fine and not very structured in that sense. And we have not valued the data. And that data, if it is collected in a systematic and structured manner, can be then transposed to a company who has figured out how to do better credit appraisal for a 2 lakh rupee loan, which is, let's say, a fintech. So in that sense, a partnership can happen. Similarly, an MFI which is now originating a credit customer for 1 lakh rupee loan requires a better process which is inherent in how repayments can happen, how a KYC read can happen, and how disbursements in real time can happen, which is disbursement in 5 minutes. That's again an opportunity for a fintech to come in and provide those capabilities to an MFI. So a lot of collaboration in that sense, John, which is possible without really invading into each other's territory, because fintechs could be lending fintechs, fintechs could be process digitization fintechs, they could be CRM fintechs, they could be so many different types of financial technology companies, even to the extent of what we are now seeing as people who build capabilities to do bank statement analysis, right? And if like to DJ's point earlier, if we are now wanting to understand what is the DBT amount which has gone into a customer's bank account, and how do I assess that bank statement, I can go and partner with a fintech who knows how to do bank statement analysis, right?
Mm-hmm.
So the way I see it and the capabilities at least we are building is to see what are the potential collaborations one can do with fintech, which is pure play technology capabilities, and more importantly, stay core to the customer engagement process, which is acquire quality data, engage with the customer deeply, service the customer on more products and services, and third, of course, have real impact on livelihood. If the MFI stays core to that, I think there is no territory overtaking here. And I see this as a complete collaboration opportunity. Even in a revenue standpoint, MFIs can see this as a revenue opportunity to say that I discover a customer which you don't have, and there could be revenue sharing as well. Likewise, for a fintech, I have technology capabilities where I can generate some fee income, and you can simply integrate with your systems. So John, this been my experience, and we ourselves are trying to partner with MFIs that are working on ground. At the same time, we also have fintech partnerships at the back end, because we work both on the, you could say, on the underwriting for micro enterprise loans, as well as underwriting for customers who are non-digitized. So we work on both frontiers, and we've experienced that this is going to be a long road of collaboration with each other to really service this customer truly and deeply. That's how I look at it.
No, thank you for that. And maybe Christian, you can give the perspective from Indonesia. I know that the headline story in Indonesia is the growth of the P2P platforms, and fintech is all the buzz. But it would be great to hear sort of your perspective on fintech versus digital financial inclusion.
No, I liked the distinction that Sweta did on, between lending fintechs and the other fintechs. So Indonesia, lending fintechs are basically exclusively focusing on urban areas. They are focusing on payday loans, salary loans, consumption loans. So they are not entering at all the let's say the space of microfinance. But so let's say in rural areas, because of lack of data, because of lack of digital footprint, because of the difficulties that whomever tried had in collections, because of course it's easy to give a loan. The problem is then go in the middle of the rice field and trying to collect the money in an efficient way. So basically they were losing a lot of money for that. So they decided, okay, it's much easier in urban areas where density is high, so it's easy to also go and visit people in case. But on the other end, there are a lot of fintechs that do other type of services. There are fintech working on payment systems. So the payment system fintechs in Indonesia, they are really going very strong. You have OVO, you have GoPay, and they're dying to go into rural areas. Also, they are struggling because, of course, the penetration of these kind of services in rural areas is not working very well, because at the end you do digital payments when you earn also digitally. I mean, unless you receive money digitally, it's very difficult for you to pay digitally. I mean, how do you do? Because then there's something I think Sati said, that you need to. It's about having the service at your doorstep, right? So before you're actually paying in the center meeting, and then suddenly you need to go and upload the money on any wallet far away in an agent or in a bank or whatever, and then you can perform the payment. So it's not convenient for clients that wouldn't do it. So until the ecosystem can be provided by these payment services providers, and we are talking to some of them to try to cooperate so that they can increase their network of agents and support our clients close to where they live for the provision of e-wallets and helping them to upload the money that they earn, for instance, or even helping them to receive the money in their micro business digitally directly. And once that happens, then of course for us is a very big plus. So we can support them to enter these villages and these areas, and they can support us afterwards into digitalize part of our processes and digitalize the payment parts, for instance, which is of course the riskiest that we have at the moment. So it's not a question of relationship, because you can maintain the relationship, maintaining the moment of the center meeting, because the center meeting will become a service hub. But at the same time, you take away the liquidity risk, the fraud risk, the huge cost linked to cash handling that we know very well is one of our major costs. So I believe there are possible synergies, but not with fintechs doing lending, which are a different type of animal. They work in different areas. They offer different products, and they have their own issues which they will need to solve for sure.
No, thank you. Perhaps DJ, you can address this and a little different spin on the question. You know, I think all of this panel are busy working to solve some of the gaps and try to address some of those places where you still need the human intervention part of it. I think as we start to solve those problems, do we expose ourselves to more competition from fintechs who can then take advantage of that digitized data in order to serve our clients differently, more efficiently, after we've done the very hard work of client education, gaining the trust of the client, etc. Do you see any risks of that? And it'd be great to sort of hear your thoughts on fintech versus digital financial inclusion business.
I think I would go agree with Sweta and Christian on the whole concept of the whole this digital companies, fintech companies coming and encroaching microfinance space. You have time for that, but I also agree, disagree on one point, that they would never come to this space. As you correctly mentioned, it's all about a time, when they can come in. It can be as early as, WhatsApp started lending. They have that bandwidth to do so. Yes, why they are not coming, as Christian exactly mentioned, precisely that they are yet to figure out how to get the repayment done. That's the only missing piece, because here we are going and collecting. So the moment it is replaced, as the ecosystem is evolving, and I think I could see that in India, it is happening very fast. And if not today, maybe in a year time, maybe in 2 years time, you will see a very conducive ecosystem for digital payments to happen. Government is supporting, government policies are supporting. There are technology available, there are technological providers available. The technology is going cheaper day by day. Rather, it is incentivizing. If you are using a digital mode today, you are incentivized. If you're buying something, you get additional discount, you get this, you get cash back. There are so many incentivization programs which is available to you if you go digital. So for your client to go digital, you also have to incentivize them. You can't go and charge 22% and ask them to go digital. So you have to ensure that you have to also bring in a product which is more efficient, less expensive. But then digitization also has a cost. So how do you manage your cost vis-a-vis what you pass on to your client? So that is something which MFIs are yet to figure out. At least at Annapurna, we are still trying to figure out how do we bring down the cost, and yet we are using a lot of digitization which has a cost. Because if for example, as Sudha was saying, you could simply go and tie up with a payment solution, but then payment solution will charge you somewhere between 1% to 1.5%. Then your entire profit is gone. Whatever extra money you could have earned is gone. So I have to replace that cost with something else. And in that process, am I compromising my basic processes, or the technology is efficient enough to handle that processes similar way that today I am physically handling. Suppose underwriting, if I take the entire underwriting digitally and just don't do it physically, don't send anybody, I'm take that manpower out of my system, they do something else, I save that cost, then only I can be in a position to pass on that benefit to the client, or get into these kind of partnerships where they also earn some revenue. I pass on some revenue to them, but because it's a very tight, in India particularly because of the regulation around us in MFI sector, we were only able to charge 10%, and again for many of these smaller MFIs, it is not even that there. They end up somewhere around 8 and 8.5. The latest pricing guideline that we have, there's a methodology. I'm sure you are aware of it. Don't want to get into that. With that, people don't have that 10% margin even, depending on what your cost of fund is. And then how do you pass on those kind of benefits unless you brought down that 6-7% of delivery cost to 4-5%? And so what are the processes to take out of that, and then what are the processes to be replaced with that? So that is an MFI confusion area that we are still trying to figure out. But my belief is that yes, digitization will happen whether you like it or not. The processes will start following. We better get ready, whenever those costs will gone down, because the costs can go down because of the volume. If the volume goes up, the transaction volume goes up for the tech companies, obviously costs will go down. We have seen, when smartphones have started coming in, it was pretty expensive. Today you get a smartphone of 5,000-6,000 rupees. So the technology will eventually will make it much cheaper and more affordable. I think with that, this will happen. And yes, so you either have to compete with them in any way, going down the line. Yes, you will be competing with them.
Thank you for that. And maybe I can ask Satish from the industry perspective, solving this issue that DJ brought up of the challenges of digitization requires investment. It requires capacity building in our clients. As I think all the panelists mentioned, you're not simply doing away with the physical. You're doing additional value-added services, and so it's not that expenses are going down. In some ways, expenses are increasing. How, especially thinking of the small entities, thinking of sort of the broad industry, how do you see that gap being addressed generally? And is there a role for government intervention to help out in that process? How do you see that solution to that gap?
Yeah, it's really as Dipjyoti was mentioning, cost, because now we always say that technology has the potential to bring down the cost, but first to have that you have to invest in technology. So this is again a very basic question of putting the cart before the horse. And as I was mentioning earlier, that probably with bigger institutions which have a healthy surpluses, it's not an issue of investing additionally in technology. But for the smaller institutions, it is certainly an issue. And we are, as a sector association, we are in dialogue with the institutions which have actually fostered the microfinance sector in India, including the government, that what is the type of to at least access some sort of a financial support for technology upgradation to the digital processes in the smaller institutions, because on their own, each institution investing on its own in the technology processes is a costly affair. So we are looking at, because we had an example of NABARD as a DFI taking on its agenda to get the technology upgradation for the cooperative banking sector, which was at a very a low level of technology adoption as compared to the commercial banks about 4 or 5 years back, and it has really helped because NABARD has chipped in with financial support as well as enabling what we say the sectoral use of technology jointly by many institutions. These are some things which we are working on, and some proposals are already there with NABARD as well as SIDBI and the government for eliciting some level of support for the small and medium institutions for their support with regard to the digitization processes, and also simultaneously with both with government as well as RBI, that some of the costs which the institutions have to incur on the payment processes, they also can be a little more subsidized to enable more of a digital adoption by the MFIs. That's also something which we are doing some policy advocacy for the sector as a whole, because otherwise if a huge percentage is charged by payment wallets and the payment systems, then as DJ was mentioning, that then a lot of our margins will be eroded. So these are the areas which we are working at the policy level with the government as well as the DFIs. And I can say that there is a positive response from them, but it should take some time before we reach that point where we will be able to access this. Fortunately, NABARD has a financial inclusion fund with it. So we are telling both the government as well as RBI as well as NABARD that one of the areas which the financial inclusion fund should look at is supporting the digital financial upgradation as far as the microfinance sector is concerned. And there is a positive response, but it will still take time for that to actually get converted into reality. That apart, just one more point I wanted to add, that we are talking about fintechs and MFIs. We ourselves have at least about 3 institutions which have joined Sadhan last year. They're MFIs and they want to work in totally branchless and in a digital mode. Started by very enthusiastic youngsters with a technology background, and they're establishing their systems and processes. We'll have to see how that works on. And as Christian was mentioning, that to start with, these institutions want to work in the urban areas with people who have at least some level of regular wage or salary type of inflows. So these are still at a early stages, and this is something which I think that we will be seeing MFIs at least working in urban and semi-urban areas who will be branchless, and probably they may work on a centerless basis also. But as they say that the proof of the pie is in proof of the pudding is in eating. We'll have to see how exactly they will structure their collection systems in the absence of a branch or a center.
No, that's a very interesting development to see that. Perhaps just to we spent a lot of time on all the positives of digitization, and I think, you know, as with any technology, there's a positive side, and then there are side effects which are more negative. And I think I can think of a few that we're very concerned about within Axion, and certainly, you know, I think one of the elements is the impact on women in particular who may have less access to smartphones, who may have less access to the digital footprint, et cetera. And I think the big question is, how do we ensure that we're not leaving those key clients behind, but are bringing them along. But then I can also think of all the sort of headline news that we see about data protection and the adverse effects that digitization technology can bring to very vulnerable clients. I know that I rarely read all of those terms of service and very blithely sign on to them. Yet we're expecting our clients to also take similar decisions, perhaps with less capability to make those informed choices that are required. I don't know, perhaps Christian, you can sort of provide a little bit of insight into how you think about at Benarta, protecting the client, making sure that no one's left behind in this digitization process, and bringing along our clients rather than leaving them behind.
Yeah, no, I think that the rationale of adopting this phygital model, it's also to avoid the exclusion of a specific segment of clients. As I was mentioning before, at this particular moment, the penetration of smartphone in the family might be high, but the use of smartphone by our specific clients is low. So we need a modular process, a gradual process in which our loan officer are flexible and they can follow the traditional methodology, so clients can choose whether they want to apply through a mobile phone or they want to apply directly to the loan officer within the center meeting or within the individual lending vertical that we also have, and there are clients who might want to do want to evolve into requesting instead the services and loans through digital means. There will be clients who will want to pay in the center meeting. There will be clients who will pay digitally. So embracing this level of flexibility, I think, is fundamental now in the new let's say microfinance 2.0, because it will be needed. If you don't do that, either you exclude a big chunk of clients, which is also a loss for the microfinance institution. I mean, if you lose 50% of your clients because the service you're offering are not accessible to them, then it's your loss at the end. No? So it's the loss of the clients, but it's also your loss. So it's extremely important that we maintain flexibility until, of course, the vast majority of clients can access digital services, and it will take time. I agree that we will get there. I don't know, India seems to be faster than Indonesia for these, especially in rural areas, but in Indonesia will take years still. But we need to be ready, we need to be there, we need to have already a very strong relationship with clients. Clients need to perceive us as their business partner, so that even if someone else offers a different kind of proposition with digital loans and so on, they might prefer us because they trust us, and we will be able to also offer that kind of service at that time. So I think that is the way I see it. At the same time, regulator associations and so on, they need to ensure that these, the client protection principles are applied, are enforced, are followed by microfinance institutions and fintechs alike, because there are issues now, and especially in the fintech world in Indonesia, there have been huge problems. Not only for the clients themselves, but there are cases of clients not repaying, and here it's quite common that the fintech is using the social network of the clients to shame the clients into repaying. So they might send messages to if the husband is salaried to the manager or to the friend or to the parents and so on. So it's improving already, because the regulator, found out about this issue and revoked a lot of licenses, but it's still happening. So even for fintechs, we need a stronger protection from a client perspective, like it happened for microfinance over the years, right? So yeah, I think these are the main points.
Maybe I can ask Shweta if you can provide a little bit of context on the Indian context of how to protect clients in terms of digitization, and then how to prevent this potential exclusionary aspect of digital transformation.
Yeah, John. I think the foundation of everything that we all are talking about is really empathy to this customer, and empathy also translates into, giving the right information and making sure the customer really needs what we are offering to the customer, whether it is a credit product or an insurance product, in that light. So that at least in the work that we are doing, the core aspect of what we call as a customer engagement lifecycle is like a base product in our entire credit solution. So when we look at the branch or the center based model, where we have a large part of the portfolio in rural areas, we have concepts like, even before the loan is offered to the customer, we call it a loan offer generation. We have something called a welcome call. The customer is not even a customer, credit customer right now, but we create a welcome call where we basically engage the customer, ask them all the relevant questions, that this is what was asked of you, this is what you provided, and this is your need, etc. And henceforth, we tell them conclusively that this is the type of loan that can be given to you. Would you consent to take this product? If they agree, that's when the actual loan creation or the loan ID generation in our parlance happens. If at that point of time customer says that no, my need is not there, I just thought maybe, one of those necessity entrepreneurs, as we call it, versus the opportunity entrepreneur. So that kind of gauging happens at that point in time, and it also gives the customer to really give that virtual consent over the phone. So we run that process. We also run a post disbursement calling process where we ensure that the money which is being credited into the customer's account, the customer is aware. The usual things like sending an SMS notification, of course, is part and parcel of the whole process. And then we do something which is over and above the loan utilization visit, is what we call as a customer check-in call. Wherein again we re-emphasize to say that this was your interest rate, this was your EMI amount, hopefully you'll be able to repay, is there a person who visited, etc. So you have to really build trust, as Christian was very nicely pointing it out, in client protection through the journey. Leads to better connect, and better connect leads to sort of retaining your customer for life cycle. That is really helping us have a much deeper and richer engagement with our customers, and we already have reached out to 2.5 lakh customers, and we are running it both on the digital as well as the non-digital platforms.
Well, that's great. I recognize that we're running up to time, and I've been bringing in some of the questions that have been coming in into the conversation throughout. But perhaps just one last question, and I'll throw it to DJ. I think we've been talking about. I think you mentioned, DJ, sort of a view of the evolution of this industry. That certainly. There will come a point where all of our clients will be in the digital world. That will take time. We need to start approaching it now in order to get there and be addressing those needs. But how do you see the, I think someone referred to it as microfinance 2.0. I don't know whether it's 2.0, 3.0, 4.0, but where we are. But how do you see the microfinance institution of 5 years from now, 10 years from now, in terms of digitization?
John, I think it's a very interesting question to tell you that how microfinance institution will look like 5-10 years down the line in digitization. I think all the microfinance institution 10 years down the line will look like a fintech company today. Of today's fintech company, but more, as Sweta mentioned, with more robust client protection principles around, more robust and more focused design for the requirement of the client, more flexible approaches inbuilt in terms of the repayment, in terms of supplying the loan, more accurate and in time processes, in place. I think that is how they will look like. In terms of the processes are concerned, I think the biggest challenge all of us are going to face is the cultural shift within the organization in terms of training our manpower processes, moving from a very high touch model to a low touch model, or a no touch model. Maybe I don't know when, but someday I wish that there will be a no touch model coming in. But I think 5 to 10 years in a medium term, I think I could definitely say that from a very high touch model, we all will be pushed to move to a low touch model, bring down the costs, control the costs by bringing more efficient technological interventions, um, and more efficient, underwriting, disbursement, and collection processes. Like it can be 24 hours disbursement. Today you have RTGs available. People can demand a loan at whatever time, and you can still deliver them. So those things definitely is going to come, and it will be better for the people. But yes, as everybody mentioned, the risks around this digital transactions, it is all going up every day. There are so many frauds happening around digital transaction. People are trapping by calling somebody, getting their password, getting their ATM pin, doing a lot of these frauds and all. But I think eventually the systems will also evolve to take care of these kind of risk management matrices. And also the people, the education around people around digital transactions and the safety of digital transactions will also be taken care of. And as we are talking about, yes, the technology definitely, if you have a smartphone today, you have so many things are available. But let us not forget that in India also, while there are still 50% people don't have that smartphone, and only 10% of the population use that internet smartphone. The rest are not using. So we will have to rethink the technology, maybe the technology to go with more feature phone facilities that they can still do transactions with feature phones, not necessarily very high end sophisticated smartphone technologies. Basic technology to make their life easy. If that works for them, they will certainly adapt it, with all the with the caveat that the security concerns are taken care of and their protection concerns are taken care of. But if these two things are taken care of, I think you will see much larger MFI fintech companies going forward.
No, fantastic. Thank you, DJ, and conscious of the time, I think that's a great wrap up. I really appreciate all of your participation, Satish, DJ, Christian, Shweta. I think it's been a very robust discussion. I look forward to continuing these discussions. Hopefully we'll be present at the Inclusive Finance India Summit in person next year, and look forward to the chance of meeting all of you in person at that time. But thank you all for your participation and for the questions that have been coming in that we've incorporated into the conversation. I think it's been a very good conversation.
Thank you, John.
Thank you, John.
Thank you,
for a good
Shweta. Thank you,
moderation.
Satish.
Thank you, John.
Vijay.
Thank you, Kristen. Thank you.
Yeah, well, thank you so much. And somebody needs to thank John, I suppose. So on also behalf of the panelists and of course Access, thank you so much, John, for all your efforts in putting together this panel. I know you reached out to everybody with your questions and made efforts to prepare. Thanks everyone for joining in, and we hope you will. I mean, now you can, of course, you will log out of this link, but we request the speakers as well to please do join from your participant link that we have provided you for the next part of the summit. We have a great evening planned. We are using the benefit of being virtual to actually stretch the day into late evening. Well, but thank you so much for this really engaging and interesting discussion.
Thank you, Radhika.
Thank you.
Thank you.
And I'd like to mention to everyone who is logged in this hall, which is Hall A, that the track, the MFI track, which was being hosted here, has been concluded with this panel. So we request you all to kindly move on to the other hall, Hall B, where a parallel track is going on. And at 5:40, we will start a series of very exciting fireside chats. There are 3 fireside chats that are planned this evening until 8:30. So we hope that you will all probably have a short tea and coffee break and then join us into the other hall again. Thank you very much.
Thank you.
AU Bank, bringing ease of banking at your fingertips. AU Bank, chalo aage बढ़ें.
Presenting 2 new tech initiatives in the retail microfinance sector. Sahyog 2.0 app to ensure data security and efficient services with newly added features like eKYC, geo-tagging and instant credit verification. And cashless payments of EMI via any bank UPI for easy and safe transactions. All this with an aim to enhance last mile efficiency and delivery for the microfinance entrepreneurs.
मुस्कानें जो दबी हुई थी चेहरों पर वो खिल गई है अब पैरों पर पंख लगे हैं मंजिलें भी मिल गई है घर घर हम पहुंचे ऐसे जैसे कोई अपना हो जो पूरा ना हो सके अब ना वैसा कोई सपना हो We are a bank of smiles. We are a bank of smiles. We are a bank of smiles. We are a bank of smiles.
So I have to speak in 5-6 languages here. I think all the partners are from different parts of the country. The journey of Ananya, I can't talk without touching the journey of FWWB. Friends of Women's World Banking, when we started 30 years back, so June only, 30 years back, 11 students said that we will work even though we are an affiliate of Women's World Banking, we will concentrate on low-income household women. And of course, the self-employed women, they are forming 80 to 90% of the workforce in India. So they don't have access to finance. So we have to work for that. I still remember that we shared the space with old Seva. I don't know how many of you had seen the Seva. And graciously, Seva Bank had given a space for us, even though it was a storeroom. That is where Friends of Women's World Banking started. And I still remember the first donor when they came. So I was doing the administrative work as well as running the organization. There were only 2 people. So I still remember Kathy Sridhar. I could see, she said that Kathy Sridhar is the person who can give you some money to start the work. So I could see Kathy Sridhar coming, the head and then the nose and this thing. So I was wondering how she looked like it. And I think the first set of trainings we did with women on collectivization and access to finance. SG was coming up that time, was with a grant that a lady from United States gave us. So throughout the history of FWWB, nurturing was done by different women. And yesterday I was telling you, the culmination and recognition of Indian financial sector happened in the place where we had a celebration yesterday. So that is where the meeting, we had a audacity called Vimal Jalan, 11. And all the CMDs of the banks came because Vimal Jalan was coming. So we told everybody, and then that is the place where with Women's World Banking we started recognizing the fact that even though there were only 14 organizations which were working with financial sector, have to come, and the idea about Sadhan was born there. So Sadhan actually owes its origin to Ahmedabad. So, and the next meeting we had was in Seva Bank, and then we decided to set up Sadhan. So as Ilavan says, it is the women finance capital of India, because Seva was there, and Friends of Women's World Banking, which was working with partners like you, was there. And we were actually borrowing money from formal financial sector and repaying money, like the way our customers were doing it, we were also repaying money on time. Then we believed in collectives and cooperatives, but somehow there was a change because the growth was much higher, and then people have to expand, and then cooperative laws were different. It's a state subject. So the microfinance sector emerged. So the first time when we were working, all of them were development institutions. And it is only thanks to the regulation that has come from RBI, then we became MFI, NBFC MFIs. But I was sharing with some of the partners, the debate was very hot in those days when they were in the development mode. So we used to discuss, okay, this is we have to work with migrants, and we have to work with Dalits, and then we have to work with what kind of products and services we have to do. That debate I miss now, because the kind of a debate that used to happen, and people used to spend lots of time on that, it doesn't happen. Now I feel that it is how to raise money, and then who are the investors, and then whether they are social investors or not, and what do they expect, and then it stops with that. So maybe that is the way things grow. But I still feel that it is important for Ananya, which has started working with women collectives, and then it inherited the philosophy of FWWB. The debate should come forward. I think it is time for us to discuss. And then quite concerned that the kind of a emerging leadership which we saw, again it has gone down. So we have to work out how women can become leaders in managing money, whatever form it is, and how you use them as a kind of a, instruments in maintaining the repayment rate is very important. So somehow that is disappearing, so I would like to flag it. And regarding the history of Ananya, my board was divided into two. So one sect said we should not become a NBFC, other said commercial people from the commercial world, they said we have to do. It took us about 2 years to decide whether it's worth setting up Ananya or not. And we had lots of debate on that in the board meeting and all. And ultimately we had decided that is only because our partners are becoming NBFCs. So it is important to play that role. So when we set it up, it was fine. We passed it on. And then none of us were expecting the Andhra crisis. So the crisis came. And it just had a big hit on Ananya. Because as you know that Hyderabad was the mecca of microfinance. And then almost 80% of our borrowings were in, lettings were in with partners there. So, but it took us about 2-3 years. As an institution, we have decided that first we have to honor the commitment to the lenders. So some of the lenders like Citibank and all wanted the money immediately because they wanted to pull out themselves from Indian microfinance sector. So all the institutions, in spite of having 2 years loan period, we prepaid all the loans, and then we thought it's important for them to have the confidence in microfinance. So, and then of course, some of the bankers who had lent 120 crores and 140 crores and all, they said that you just tell us that you are defaulting, we will just reschedule the loan. So my board, I think I still remember, the surprise came because the board chairman was from Sydney and he said no. So we said maybe we are right. So we said no for restructuring the loan. And we were the only ones who paid the money on time, and then we honored all those things. But we have to thank the non-AP partners of Ananya that time, who without getting a loan serviced the old loan that was there in their books. So if the money wouldn't have come, we wouldn't have honored the debt to the banks. So about 500 crore we have returned to the banks during the time. And it was always inflow from the partners and then outflow to the banks. And there was nothing left for us to run the organization or acquire new clients or service new loans to our own partners. It went on like that. So, and we realized, and most of us didn't know that running a company is such a tough thing, because it was very easy to do it in a non-profit mode. So we asked, they said that unless you bring in capital, you just can't get out. That time, IDBI chairman, who was ex-chairman of SIDBI, who knew our work very well, IDBI chairman, he said, he took the first plunge and then said that he will give the equity. So, but the only thing is, they say, took it as OCCP. I said, whatever the form you give. And then also match it with a loan. So it helped us to have a kind of a breather to get out. And then Women's World Banking came. And then, of course, Gojo came. So like this, in this kind of a meeting in Vietnam, I happened to sit next to him. I told him, give us money. So he said, it moved very smoothly. So I didn't know that, I didn't take him very seriously, but Gojo is a major investor in Ananya now. And of course, the C4, that time it was ICO only, so I didn't know, only when this thing. So of our work, of FW's work in agriculture, helped us to bring ICO credit. So that is how Ananya grew. Now I think the they are getting money from everywhere, and then they kind of bad days are over. So we turned it around and then we left so that they can manage. But I have only one request, Mr. Bhatt. The brand of FWWB was having lots of issues being discussed openly and keeping women at the center of all the services we have provided. I think it is important for Ananya to continue doing that, keeping women at the center, because the microfinance sector, Indian microfinance sector, owes its growth to women's repayment. And how they did it, we don't know. And then it is not that there was a surplus that came because we have given one loan. It is actually the attitude of the women to honor the kind of a debt was something very unique. I think we have to recognize that. And FWB still works with the collectives of women, but we find that the impact of credit alone is not enough. So it is important to work on credit plus activities. It is very critical because credit alone is not helping. And particularly for women, because they are ill-equipped with education and skills, it is important to help them to make additional credit available to enhance their status as well as the income sources. So with that, I will wish Ananya the very best. So don't forget the women and the collectives, and then you have to grow with them. Yeah, bye.